In this video, I'm going to be showing you my live trading scalping Emini futures, and it is approximately 7:21 Central Standard Time, and the market is going to open in hour and 10 minutes. And I like to be early just because I like to do my pre-market analysis, so I'm not caught off guard. And what I can see is the market has been going in this consolidation for the majority of the session. So what I'm going to do, I'm going to draw my support line, something like this, because I can see that this is a trading range. And I'm going to draw my resistance line somewhere around these highs so I can clearly see where are the highs, where are the lows. And I want to be on the right side of the market when I'm taking it trades. So I'm going to draw my shortened trend lines because I want to follow the rules of trend lines, which means that after trend line will break, prices will attempt to make a new extreme. And we had a trend working lower, we have a break and a new low, and we found a support and we reversed quickly higher. We pushed above the EMA. This was the first leg, little correction, this was the second leg. We are working higher above the EMA, and I'm expecting for prices to get to the other side of this trading range, because this is how market acts in a trading range. It goes from tops to the bottoms if it's a healthy trading range. We push higher, so this would be the first leg. So I'm going to be expecting after correction like this, a second leg, the potential. It may happen, it may not happen. This is what I'm expecting, because two-legged move is a very high probability setup. The market moves, and this is generally how market moves in a pair of two. So this is why I'm looking at this, and it's also going to be a break and a potential new high. So we'll see how this resistance will go, or we may even turn down lower. Nothing is guaranteed, but this is how I'm looking at the market right now. All right, traders, and we have our first pullback. Just as I was expecting, a market made a two-legged move up. We made a little bit higher, a few ticks higher, but it doesn't matter because the measured legs, they don't always have to be measured. Close is close enough in trading. This is our first pullback, but I'm not going to go short on this bar because the bar is way too big and my risk to reward ratio wouldn't be too great here. But I'm expecting for prices to basically go back into the trading range, because most breakouts of trading ranges will fail. And this is clearly a trading range. And this is looking like a strong depletion move up. The last bullish bar is very strong, so I'm expecting some sort of setup to fade the breakout potentially. The resistance may act as a support, and we may continue working higher. But my first initial instinct is to look for fading the breakout. All right, traders, and I'm playing with the idea of going short here. The bar finished looking quite neutral, but it is a form of second entry long. It is hidden, but I'm going to explain to you. It will depend. If we break below this bar, I'm very tempting to take this short because it is a lower high of this setup, and we definitely push back, and the resistance is holding prices. If I just move it a little bit higher, you guys can see that the lower high couldn't really close above. We traded higher at the very end of the bar, we traded up lower, and we just broke below. So I'm thinking I'm going to put my limit order one tick back because the signal bar is not good. I want to see the signal bar that is indicating me a strong bearish momentum, that the sides are switching, and there are still there are two ticks of a bullish body inside of this bar. What I want to see a bigger stem. So we may miss this trade, but I don't want to, be wrong here just on a bad signal bar. I've burned myself that many times, so I'm going to place my limit order one tick back. And the reason why I'm taking this, because this is the first leg working lower, and this is a little bit of a hidden second leg. It is not so easy to see, but you guys can see we have a new high right here, pull back, first entry long. Now, we didn't trigger lower, so this is we got filled, so this is technically a part. I'm going to merge my contract because you guys can see the volatility is really slow, and I'm going to go for 8 ticks, 2 points right here, and the stop is looking like it's 1 point. It's looking like it's a little bit more, 1.5 points. We're halfway in already, so let me focus on this trade, and I'm going to explain to you. Market is rolling up quickly. Come on, we're one tick away from getting. We need to tick through the order a lot of times. Even though I use my automated strategy, would automatically put my stop loss and target profit in place, so just I'm early in the queue. A lot of times that is not enough, and you guys can see in this case it is not enough. Prices still have to go through your order and take one tick through, so you don't get. This is why I like using automated strategy, because a lot of times you can get a little bit more leeway and you can exit a little bit earlier. And perfect, we got filled, and we didn't even have to tick through. So this is an advantage of the automated strategy. So this was our first trade today, but I want to talk about this because this is the first entry long, and since we didn't trigger lower, this is still part of first entry long. But you guys can see on a smaller scale, there's a first entry long, and then the next following bar is a bearish bar. So this is an attempt to push market lower, and we can treat it as a second entry long. It is a hidden move, and don't worry about it if you're a beginning trader, but mostly I'm relying on failed breakout. And this pattern is actually very similar to the pattern that was on my Friday video when I was talking about trap. There was a failed second entry long at the EMA, and this is looking very similar. The key here that I was playing, it is a failed breakout. Most breakouts of trading ranges will fail. You don't have to believe anything you read on the internet. Just watch the markets, watch the trading ranges, and see how the market is reacting, and most breakouts will fail. This last bullish bar is very strong. It's indicating a depletion. We have a two-legged move up, first leg, pull back, second leg, and I was instantly looking to fade the breakout because this is a healthy trend. Failed break higher, lower high setup. This is where you want to go short here. It's been approximately 10 minutes since our last trade, and the first time I decide to merge the contracts into one scalp because it's looking like the market is going to go slow, we just sold off for no reason whatsoever, and we're breaking this low right here. I still think that this is looking like a healthy trading range, but man, take a look at the runner. This would have been an insane runner. Let me measure. This is 10 points over runner that I just missed because I merged my contract, because the volatility looks so slow that I was only looking for reasons to scalp. I didn't expect really something like this to happen, but this is why you always want to keep those runners, especially if you are fading the breakouts, because sometimes you can catch a low of the day or high of the day. So always try to scale out and keep the runner. I just got punished now because I really believe that the market is going to be very slow, it's going to be choppy. But we push below, and we have a massive downtrend working lower. So I'm going to draw my short-term trend line. I'm expecting for prices to at least pull back to this key level right here, because this is how market will act. And we have a failed break lower, but this is looking so strong that I'm not really interested in buying the market. Look how far away you're from EMA. Also, EMA acts as a magnet, and it will pull prices closer to it. So I'm thinking, should I go long here? What do you guys think? This is looking tempting. I probably missed this trade, but look how far away from EMA. Failed break below this trading range, and you're so far away from EMA. This is looking very tempting, but I have a gut feeling I want to sit in my hands because this is looking very strong. Alright guys, so just a little bit of an update. Market eventually made a quick, easy scalp here. I probably should have ended right here. We made one more leg lower, and this is the first break of this downtrend. This is why we have to draw the short-term trend lines. We have a break and a new low right here. We have first entry short, second entry short, but we're not touching the EMA. We're a little bit away from the EMA, and this is a failed break lower, so you're expecting for prices to push back into the range, just as you were expecting for prices to pull back into the range from the failed break higher. Prices are right now working their way higher inside of this smaller uptrend. So I'm going to draw these short-term trend lines once again. So on the right side of the market, that's the key of this strategy. We have to, find and locate the key entry points. And right now, this support is trying to hold, but there was really no setup right here. So I'm just sitting on my hands, and I want to bring this up because this is the screenshot from the Friday, and you guys can see we are working in trading range up down, and we have a first leg working higher, little break, and a second leg working higher. This was a two-legged move up, and we have a first entry long right here and a second entry long right here. We're above the trading range, and we're fading the breakout to the downside. Very similar I was expecting right here. We have a first leg working higher, second leg working higher, and we are fading the breakout. First entry long. This was just technically first entry long, but this is a hidden move of a second entry. It doesn't really matter. When the context here is so strong that you want to take the lower high setup and fade the breakout, this is why the technical analysis works, because the patterns repeat over and over. Now we didn't go lower just like we did today, so I wasn't really expecting a huge runner, but you know, there are reasons for that. We don't really care about what it's going to do. This is why we are scalpers, and we only focus on this tiny little move so we can take our profits and go away. So you guys can see the technical analysis, these patterns repeat over and over, and this is why you need to get your experience under your belt, because a lot of traders, they want to go in and they want to be successful after 6 months of trading, and you just don't have enough experience and you haven't seen the market go through all the phases. So you have to be patient here. Prices pushed above the resistance and the EMA is holding prices. The support is holding prices big time. We have a first break of this uptrend working higher, and we're just on our way to make a new high. There was a two-legged move down. This is the first leg. This is the second leg. Market likes to move into. This is why it's such a high probability setup. Two-legged move down, and this is a nice big bullish bar. I just was a little bit unsure going long here because we were so close to the EMA and we were below the EMA. If we pushed higher and closed above the EMA with the bullish body, I would probably pull the trigger right here. But since we closed below EMA and this move was very strong, I didn't really know what to do. And right now, look at the stims. Look at the bars. They were trying to go higher, trying to go lower. Starting to get choppy. I'm just really sitting on my hands. It just, you know, I'm kind of pissed that I didn't hold the runner here because I could have made 10 easy points. Instead, I just got the scalp. But I'm going to mark this trade because this would be a great trade if he just pushed. In hindsight, I still think this is a good trade. I think you have to take the fact that the support is holding so nicely. It is a first break of this uptrend and it's a two-legged move down. I mean, you can't really make a case for not taking this trade. I probably should have go long here. I didn't, but that happens when you watch the market live. I think we have a potential another setup being formed here. It will depend whether we break below this bearish bar. If we break below, I'm going to put my limit order. If we broke below, can we get filled here? We got filled. I'm going to move my stop loss one tick above this signal bar, and I'm going to merge my contracts. I'm going to go for 8 ticks. So you guys can see this is a perfect 1-to-1 reward ratio. Very long-term sustainable. But what I'm looking at is we chopped a lot for a long period of time. You guys can see a lot of stims, a lot of dojis, and we failed to break higher and prices failed to break lower. So there was a lot of indecision. But what I'm looking at, we finally have a new high of this uptrend working higher. Break, a little bit of a sideways correction, sideways action, and a new high. After the new high was formed, we have a nice big bearish bar right here. Even though it is an inside bar to this bar, I like because it is such a nice bar. Not only this is the new high, this is another failed breakout of this trading range. You guys can see we're already in the middle of the trading range. We may find some support at the EMA though. But once again, similar thing, I was looking right here, failed breakout. You guys can see my smaller trading range right here, failed break higher. So I think we can push lower. Come on. This would have been really great trade. I'm kicking myself that I didn't really pull the trigger here. This second entry long, nice bullish signal bar. Support is holding. The price is consolidating, and this is the variation of a small trading range inside of this bigger trading range. And I have another picture for you guys right here. This was the day that I recorded, and you guys can see that the prices was trading in this bigger trading range right here, and then eventually they consolidated inside of this tiny trading range. So this was a small trading range inside of this bigger trading range, and I played the small trading range rules after some time, and this is what I did pretty much today. This is a bigger trading range. At first I'm playing the bigger trading range, but as the market is consolidating and going sideways higher for longer and longer, because this has been almost hour. It doesn't seem that way for you guys because I keep pausing, but this has been a long move to the side. So I've been sitting on my hands here, and I know a lot of traders that we're bouncing off our target profit. Come on, don't do this to us. I know a lot of traders got chopped into pieces inside of this. So this is the first clear breakout out of this trading range, new high of this trend line. We're struggling to push lower. Not really what you want to see. But you guys can see that I think I was right when I made the call on the low volume early on. It just, I missed this trade, yes, but when you take it in the long term sort of point of view, I think I did the right thing because you guys can see the market is moving very slow, and this is only 8 ticks, and look how big of a move this is. This tells you that there's a very low volume here. Normally the 8 tick looks something like this, but you know, when the volatility is slow like this is looking very big. So this is how I gauge the volatility and whether I should go for 8 ticks or 10 ticks. But you know, just to show you guys that the market patterns repeat over and over, and if you just stick with it long enough, you can read the chart and it will become a second nature. We're struggling to push lower though. We're bounced off my order. Let me see. We didn't make a measured move quite higher. Yeah, but I don't think we're gonna make it right here. We barely made it to the middle of the trading range, and this is telling me a lot of information. Normally you should have been pushing higher, and the way you consolidated around this support tells you that bulls are really weak, because we should have pushed higher instantly. Just like we pushed low right here, this is telling you the bears are strong, and this move right here is telling me that a lot of bears are strong. This move wasn't really so strong, so we already were supposed to be at the highs, but we're barely in the middle. And we got filled perfectly, so good. So how long was it? This has been 17:00, which would be 10 CST if I'm not mistaken. This is 8, 9, yes, 10 a.m. Central Standard Time. I've been trading for somewhere around here, so this has been 2.5 hours. So I'm gonna wrap it up. It's been a pretty long day, not really eventful, but these failed breakouts, that's how you trade it. Those are your key entry points. And notice how early the trading range was very, very healthy. We were going up, down, up, down, up, down. This is looking very healthy. When you start to get in the middle and you cannot go to the other side, this is where I'm, you know, starting to get a little bit hesitant that the trading range is not going to look that healthy. But the patterns look similar, just like I showed you with the snipping tool. And the failed breakouts are so powerful. A lot of traders are afraid to pull the trigger because it is counterintuitive, but you really don't want to sell the breakout to the downside and buy the breakout to the downside. Look at this big, gigantic bullish bar depletion move. Every time you see a big bar at the very end of the move, far away from EMA, that is a depletion move when you're breaking from a trading range. That's what I mean. And here we have another big bearish bar right here, and look how many people they trapped in. A lot of traders, they just trade based on the momentum. They see this gigantic bar, they put their sell stop one tick below this bar, not knowing that the prices will pull back to the EMA and into this trading range, and they will get unfortunately trapped. And this was I think this was a valid trade to take as well, because at this point on, you're really far away from EMA, and you're expecting a little snapback. And it looks like we are working sideways right now. So yeah, I'm gonna wrap it up. If you made it to the very end of the video, that means you're enjoying the content. So I would kindly ask you to hit the like button. I would appreciate it. And subscribe to the channel if you haven't and you like studying day trading. And hopefully you guys had a good trading day. It's been a little bit choppy, but I think it's not one of those choppy days when there are no setups. I think this has been pretty good day. So we could have made much more with the runner, but we don't want to be greedy, and there's always another day. So thank you guys for watching, and I'm going to see you guys in the next one. Take care, everybody.